especially if you're going to spend the same money. So if a person has a budget for 400,000 to buy a house, or 450, I would pick the biggest capital city that is also in line with the cycle. So like Brisbane right now, everything's already jumped up 50 to 70% in the last 3 years. We used to buy houses all throughout Brisbane, Moreton Bay, Ipswich, Logan, and Brisbane City Council for like 280, literally 3 years ago. And now those same properties are like 550. They've doubled in 3 years. Perth, I believe, is way better opportunity right now to pick up houses for like 350, 380, 400, 450. With the yield in mind, you've got 3 investment properties at the moment. You mentioned the yield, the one that you originally bought for 530 is running for 550 at the moment, and the other one is probably about a 6% yield. Your average yield is probably high fives, low sixes. To get the highest kind of yield, if you are after a standalone house, you're gonna have to probably be in that Perth market. Unless you go a duplex in Brisbane, like I've got a duplex at the moment in Brisbane or outskirts for like 590,000, and that will rent for 750 a week. And that's in Queensland, Brisbane outskirts. Perth, you can get ones, I'm working on one now for 390,000 in Perth, and that'll rent for 550, 600 a week. Very easy. With the yield in mind, probably Perth would be the best suit for the next one. We'll go through 3 or 4 or 5 different options together. We can run through them all over the phone. I can explain about each and every one of them, show you the comparable sales, show you the cash flow sheet, show you, how we've got the deal, and every single facet about it, the stats, figures, data, statistics. You might have heard that statistic, but like literally not many people get past 6 properties. Like there's less than 1% of all investors ever get past 6 properties. We're always negotiating new properties every single day, and usually every week between 2 to 5 properties come available every single week. Most average price points are between, as little as 200,000 to as high as 700,000. The midpoint's usually around that 350 average kind of price, or 400, 250 to 400 average. We always negotiate the properties first. We get access to 80 to 90% of the properties that we pick up are usually what they call off-market sales, meaning they're usually like urgent sales, distressed sales, bank repos, time-sensitive matters where sellers need to sell very quickly. Essentially, once properties are negotiated, if we get access to a property, let's say that it's off market, they need to sell within the next month because it's a legal issue or a time constraint, we'll negotiate it based off what the market value would essentially be. If we can see other properties are selling now for 400 to 420, well then we know this would be a really good deal if we can get it for, let's say, 370. Because that way we can show you we've got this property for 370, look at all these sales, look at all the ones on the market, you can see they're selling for 400, 420, and we've got this for 370, as well as the growth and the yield aspect. One thing that is really important is to try to buy under what other ones are on the market for, because that way you get an equity that you can essentially revalue relatively quickly and use that equity to buy another one without actually waiting for growth to happen.